I'm Dhiran Anagi Kanagishwaran. My metric number is 08DPI22F2046.
Myself, Shantini Naidu, Annapurpan Kattarayan, and my metric number is 08DPI22F2043.
My name is Nahulan Anaraki Mogan Raj. My matrix number is 08DBI22F2039.
Hi everyone, my name is Leela Ganesan. My metric number is 08DPI22F2045.
Hi, Assalamualaikum. My name is Nushaira binti Muhammad Nazli. My metric number is 08DPI22F2074. A very good day to our respected lecturer. Today, we will be presenting our topic for International Financial Management, which is about ethical concerns related to risk in the financial sector. And we will also share some effective strategies to reduce or manage those risks. As digital transactions and online banking continue to grow, we are also seeing a rise in unethical practices and financial frauds that affect the integrity of our financial system. As more and more people use online banking and digital ways to pay, bad people are finding more ways to cheat and steal money. This can really hurt how much people trust the whole money system. Ethical behavior is crucial in finance because it helps maintain public trust, ensures compliance with legal standards, and protects customers from harm. For today's presentations, we will explain three key ethical concerns, which is scam, bribery, money laundering. We'll also provide real-life examples and practical strategies that banks and companies can use to address these issues. So now, let's begin with our first ethical concern.
So, I will now explain our first ethical concern, which is scam. A scam is a dishonest or illegal activity where someone uses tricky or lies to steal money or information from others. So, in a financial sector, scam usually happen through phishing emails, fake phone calls, or false investment offer. So, for an example, a scammer might call a customer pretending to be from a bank, asking for a credit card number or OTP. So, once the information is shared, the scammer uses it to steal the money. And this is not only cause financial loss to the victim, but also damage the reputation of bank and financial institution. So, how can we reduce the risk of scam? So, here are some strategies that help to reduce the risk of getting scammed. We can give education for customer, like banks should regularly educate their customer through SMS, email, or awareness campaign. So reminding them to not share their password or personal banking information. And next, we can use a multi-factor authentication, which using OTPs or face recognition and or fingerprint to improve the security or of transaction. And next, we can use fraud detection technology. Like example, bank can use AI to detect the unusual behavior, like sudden large withdrawals or logging items from unknown device. Yeah. So this action can help protect both customers and the financial institution from scammers.
The second ethical concern we will look at is bribery. Bribery is when someone offers or receives money, gifts, or favors in exchange for doing something dishonest or illegal. It breaks trust and harms fair competition in business. This makes it hard for honest people to succeed because decisions are no longer based on merit or rules but on unfair advantages. In the financial industry, bribery can happen when a bank employee accepts money to approve a loan application without proper documents. This can cause serious problems because loan may be given to people who are not qualified, leading to big financial losses for the bank. It may also involve higher level corruption, like influencing decisions on investments or licensing. For example, a company might offer bribes to government officials to get special treatment or to win contracts unfairly. This not only affects the businesses that follows the rules, but also damages the public trust in the financial system. There are two types of bribery. First is active bribery. Active bribery is when a person offers or promises a bribe. This means they are taking the first step by trying to persuade someone to act unfairly. For example, a company manager might offer money to a government worker to speed up the approval of a project. Second is passive bribery. It is when someone requests or accepts a bribe. In this case, the person is willing to break the rules in return for a reward. For example, a bank officer might ask a customer for a gift in exchange for approving their loan faster. Both active and passive bribery are wrong and illegal. This can lead to fines, jail time, and loss of reputation. More importantly, they hurt the fairness and honesty that businesses and society need to work properly. This is why it is very important for companies, especially in the financial industry, to have a strong rules and training to prevent bribery and to encourage employees to report any suspicious behavior. Now, how do you manage bribery risk? Here are 3 effective strategies. First is strong anti-bribery policies. Financial institutions should have clear rules and codes of ethics that strictly say bribery is not allowed. These rules must be easy to understand and followed by everyone in the company. Policies should include examples of bribery and explain what actions are not allowed. Regular training can help employees know how to handle bribery situations. Next is whistleblower programs. Employees should feel safe to report suspicious behavior without fear. Whistleblowers are people who speak up about wrongdoing at work. To stop bribery, companies must protect these people and keep their identity secret. A safe reporting system helps create a workplace where honesty is supported. The last strategy is regular audits. Audits are checks on records and actions to make sure everything follows the rules. Regular internal audits can help find signs of bribery early. These checks can be done by trusted staff or outside experts. If bribery is found, the company should take action like firing the person or reporting them to the authorities. Practicing transparency and honesty is key to building a good reputation. When companies are open and fair, people trust them more. Customers, partners, and investors prefer to deal with businesses that are honest. Fighting bribery is not just about following the law, it's about doing what is right.
Money washing, the last problem we are looking at. So is when people take money from bad things like selling drugs, gambling that is not allowed, or cheating, and they try to make it look like a money came from something good. So for an example, a bad person might use dirty money to buy a house or put money into a company. So later they sell the house or the company to make the money seems clean. So if banks or money players help with this without knowing, so they can get into big trouble with a law and people will not trust them. So to stop money washing, I am going to tell 3 ways. The first one is customer. To know the customer KYC. Bank need to check who every customer is, know where their money comes from, and watch what happened in their accounts. Second thing is watching money moves. Special computer programs are used to find strategy or things happening to like someone putting in a lot of cash or sending money in risky countries. So the last strategy is rule against money washing, AML. Bank follow rules from around the world and tell the police or group like Bank Negara Malaysia if they see something suspicious doing these things, help to stop bad actions and also keep the whole money system safe.
Today, we're going to conclude our presentation with us exploring 3 serious ethics issues in the financial sector, which is scam, bribery, and money laundering. All of those problems affect trust, reputations, and the smooth of operation finance service. But the right strategy, we can reduce the risk and improve active practice. Among the solutions that we share was increasing customer education, digital security, enforcing strict anti-bribery policy and international controls, Using KYC, producing and transaction and monitor system to prevent money laundering. As a future professional in business and finance, we must be aware of those ethics challenges and take active steps to promote honest responsibility and good governance. So on top of all that, it's super important that the people in charge are also doing the right thing. You know, the bosses got show everyone the being honest is the way to go. It's not just something they say. And if someone seems something fishy happen, that should feel safe to say something without getting in trouble. We should also keep learning and talk about that right and wrong, especially when the things get a bit complicated. If we all try our best to be honest and do whatever right, hopefully all the money stuff will be more trustworthy for everyone. That's all from our group. Thank you for attention, and we hope you again useful insight for our presentation. Thank you.